He's got a doctorate. He's Dr. William Lee. We've had him on many times before. He's the chief economist at the Milken Institute. Dr. Lee, thanks for coming back on Early Morning.
Thanks for having me, Mitch.
So the Fed, they're meeting. They're going to announce a rate hike today. It is widely expected to be 75 basis points. That is 3/4 of a percentage point for the layman that does not have a degree in economics. I guess the question is more, are we expecting anything bigger than 75 basis points? And also, are we expecting another rate hike in December? Because this one's kind of a foregone conclusion.
Well, Mitch, not only are we expecting one in December, we're expecting further increases that'll bring the federal funds rate up to about 5%. Because right now, Chair Powell and the FOMC are not convinced that the economy has slowed down enough that inflation will come back to its 2% target. We're way above 2% right now. We're closer to 6 or 7, depending on how you measure things. And with inflation that high and that far away from its target of 2%, the Fed is going to have to do a lot more.
It's been 40 years since we've seen inflation like this, but you said that you have worked with in the Fed. You have studied Paul Volcker. Obviously, you know plenty about what happened during the Reagan years and the end of the Carter administration, the last time we saw inflation like this. So how long does it take to get through an inflationary cycle like this? How many times will we'll be talking about a rate hike until we get down to that 2% inflation target?
Well, Mitch, it took Paul Volcker years to be able to bring inflation back down, but he was dealing with a very different economy back then. People had no faith that the Fed was able to do its job. People thought that they really had to raise their prices and raise their wage demands much, much more and get ahead of inflation. Right now, we don't have inflation expectations so wildly unanchored. People really believe that the Fed will be able to do it. The question is, how long will it take and how deep a recession will it take? And right now, the Fed's trying to convince everyone we're not going to flinch. We're not going to give up the fight just because we see signs of inflation flattening out or even turning. The Fed is going to convince everyone that they're going to stay on the case. And that's why there's going to be no let up. Even though the markets right now are all waiting for the Fed to give some signal that the tightening will end. Because right now, the housing industry is getting crushed. And even though the labor market's very strong, people are very, very worried that layoffs are going to start to mount.
So the folks that have the impact on the economy that actually can influence economic policy, do you think they have more faith in the Fed's ability to eventually get inflation down because Paul Volcker was able to do it? They know that it works, as opposed to back then they weren't sure that it would work?
We know the policy tools work. What we don't know is whether Chair Powell and this FOMC, this committee for monetary policy, is going to have enough guts to stay with it. And right now, it's a game of chicken between the markets, who are all anticipating some kind of pivot and some signal from even today's press conference that Chair Powell and the committee members may start to ease up a bit. And the Fed's own determination to say, we're not going to give up until the fight is won.
Dr. Lee, I'm really nostalgic for a 0% federal funds rate. Are we ever going to see it again?
It's unlikely because zero rates is really a very harmful thing for our economy. It makes it so that people really don't know how to allocate their resources. When you have higher interest rates, more normalized interest rates, we have the ability of financial markets to be able to sort through what are high priority projects and what are low priority projects. When rates are zero, every cat and dog investment looks good.
All right, so that is not a great idea, even though I'm nostalgic for it because I'd like to buy a house one day. Let me bring you back to the last time we talked. I had you on after the inflation number came out, the CPI number came out. It was higher than expected, and yet the market still went crazy, and you and I were on the next day like, how, what? I was more like that than you were because you know what you're talking about. But are we likely to see a reaction from the market in the short term here today based on what the Fed decides to do or, later this week? Or have they already priced this in and we might see a reaction like we did after that CPI number came out, which is, we're still going to trade stocks?
Mitch, you're going to hear Chair Powell sound very, very hawkish and very stringent, strong about fighting inflation. He's going to give as much of a Paul Volcker-esque speech as he can. But markets are going to look for every word that would hint that the tightening will end sometime early next year. Once the markets sense that there's a bottom coming, everyone's going to start jumping in because they know that once the Fed turns, the stock market itself and the financial markets themselves will start to regain ground, and they want to jump the gun before everybody else. That's the nature of financial markets. Everyone wants to get ahead of everyone else, and the markets tend to overreact to even even the strangest news.
Thanks for watching. Go to newsnationnow.com to find News Nation in your cable lineup. And don't forget to click the red subscribe button below to get more of News Nation's fact-based, unbiased coverage.